Jeremy Corbyn. The time is now 6:15. The tests used to see if UK banks are strong enough are useless. Simon Jack has more on our business news. Morning, Simon.
Morning. Yeah, worse than useless, in fact. Flawed, unreliable. Some of the strong phrases used to describe the stress testing process used to check the resilience of our biggest banks to severe market conditions. They come from a report by the Adam Smith Institute. Gordon Kerr is an Adam Smith Institute fellow and co-founder of the risk consultancy group Cobden Partners, which co-authored this report. Good morning to you.
Good morning.
So the stress test is this, basically. GDP falls 3.5%, house prices fall 35%, and interest rates go up by 4%. Now, that sounds like a pretty awful combination of events. What's your problem with that as a stress test?
Well, good morning, Simon. The problem with that as a stress test is quite simply this, that in accordance with the Bank of England's own discussion paper about these stress tests, you cannot infer anything as to the confidence of a banking system from performing a single scenario analysis. There should have been a range of scenarios. They chose to do only one.
Okay, well, they admit that, and they're saying that they're going to add another one, which will have emerging market exposure. I mean, and they also added a leverage test, which some banks would have failed last year and now pass. I guess what they would say is that you can fix the roof while the sun is shining, but not all in one day. This is a gradual process, and they're beefing up these tests over time.
There's no actual evidence of any tests being beefed up. In fact, there's plenty of evidence spelled out in this extremely expensive and thorough piece of research, which is primarily authored by Kevin Dowd, to establish incontrovertibly the fact that, if anything, the bank appears to have kind of gamed the rules of stress testing itself. The Financial Stability Board specified that in addition to the base minimum 4.5% equity ratio, there should be buffers added on for three other elements, none of which were used.
Okay, so what you're saying is that one part of the bank, there's a conflict between the different bits of the bank. Is that what you're saying?
Well, obviously there's an inherent credibility problem in the whole concept of central banks stress testing the health of their national
Okay, what do you want to do? You've got to have some sort of test, some people would say. What would you do?
Well, I would certainly focus increasingly on the importance of honest and genuine accounting policies conducted by accountable senior managers. And this is not some kind of way out point. Even Deutsche Bank's own head of bank analysis in the last month has called for some kind of common sense coming back into bank accounting, because they regard bank accounts as utterly opaque.
Okay, so is the answer to this personal responsibility at the bank executive level?
We at Cobden Partners have, of course, already drafted legislation along those lines, which was presented to Parliament by Steve Baker.
And just spell out essentially what it's calling for?
It's calling for a combination of changing the rules on limited liability, for the posting of personal bonds by senior managers. There should never be a scenario where taxpayers are called on to bail out banks or back depositors without senior management or stakeholders suffering financially first.
Are you actually saying that fundamentally you believe the UK banking sector is unsafe?
It's certainly in a far weaker condition than the Bank of England would have us all believe, based on this deeply flawed 2014 December report.
All right, Gordon Kerr, thanks very much indeed. Listening to that is Anthony Brown, the Chief Executive of the British Bankers Association. He's here to talk about his retail banking conference, but some thoughts on that?
Stress testing is new. It is a work in progress. The Bank of England admits that. They've been very successful in the United States in helping build up strength of the banking system there, which has been used for a few years. But the main thing is actually stress testing is just one of many, many tools. It isn't the belts, it isn't the braces, it's like the safety pins on the
What about this idea
in terms of holding up the banking system? Actually, banks have got 10 times as much capital now as they had before the crisis. I mean, Gordon's absolutely right. Obviously, banks should never, taxpayers should never have to bail out the banks.
But what about this idea about having personal bonds of senior management? That would make banks pretty safe if you thought, if you bankrupt yourself if you got it in trouble.
A lot of banks are doing that in terms of paying their staff in bonds, in long-term sort of equity of the banks, etc., so that if the banks do fail in any way, then they do lose a lot of their money.
Okay, we're going to have to move on, because in your conference, you're talking about some of the big issues that coming along. One of the things that struck me when I was in Canary Wharf recently with things like HSBC, Barclays City, they were all around, still dominate that skyline. But none of those names, brands, mean anything, for example, to my kids. If they could open a bank account with Snapchat or Facebook, they would. And that's the coming threat to the banking sector. We need banking, but we don't need banks.
As Bill Gates said, absolutely. I mean, banking is going through a digital revolution. I mean, they're increasingly turning into sort of IT firms. In fact, I find mobile phone banking has gone from almost unknown 5 years ago to the most popular way of interacting with your bank. It's overtaken internet banking. Telephone banking has halved in the last few years, or indeed visiting branches. There are a lot of tech firms, as you say, that are interested in banking, offering different services, and that's great for consumers, great for competition. The banks are alive to that. What we do ask for is a level regulatory playing field to help protect consumers, make sure that actually consumers don't end up losing out because they go to one firm and don't get the sort of protection they would get if they go to a bank. In particular, deposit protection, for example. Actually, if you're holding deposits, you're holding people's money. There's a lot of, there's a huge responsibility, and if you're doing that, then obviously you need a license to protect consumers.
Where's the EU referendum figuring in your agenda today? We obviously had noises from Deutsche Bank and from others, and HSBC considering their position. What are you expecting to hear today?
Well, the conference today is mainly about retail banking, which is actually less affected by the EU referendum than wholesale banking, which you mentioned. And actually, for the wholesale banks, it really is mission critical for a lot of them. A lot of them have come out publicly saying that actually the UK needs to remain a member of the EU for them to keep all their jobs in the UK, because their business model is they put a lot of jobs in London, tens, hundreds of thousands of jobs here, indeed across the UK. It isn't just a London thing, so they can operate across Europe without let or hindrance. And actually, if there is if that becomes more difficult, if we leave the EU, if they can't operate across Europe, then actually they'll think about relocating those jobs, and that's what they've been saying.
And a quick word on culture and conduct. I know it's one of your themes today. What progress can you report on that? Little, I suspect.
We could always have more progress. I mean, it is clearly a very big issue, both in the wholesale markets and in the retail side. The banks are doing a lot to try and improve conduct, but it's a very difficult thing to change overnight. These are big organisations, but there is a lot of work trying to make sure that the banks live up to the standards that the rest of society quite rightly expects they should live up to.
Anthony Brown, Chief Executive of the British Bankers Association, thank you. Now, amid the rancour over the Greece crisis came a new and shrill voice yesterday.